In terms of asset allocation, we are slightly more optimistic for Europe than for the US at this stage. But remember, clearly in the US, it's mostly tech stocks which are being impacted at the moment. Europe is relatively cheaper and has a better outlook than it had a few months ago, thanks to the EU-wide rescue package that they have put together.
Frédérique, I was making the point around some of those big tech stocks that there is a little bit of news flow coming, Apple in particular, around the launch of new devices, Microsoft, any moves around the dividend, and we've seen enormous trade around a couple of these single names in particular. What do you think is going to happen from here, because the market is concerned about very stretched valuations?
Valuations had got stretched, and we are hearing a lot of clients asking us whether this is a remake of the tech bubble burst. We don't think it's the case. These companies have much stronger fundamentals than they had then. And it's not only the FANGs. If you look at deeper into the S&P 500, about 30 stocks year to date to early September had gains, had doubled their share prices. And these companies have sales growth, generated sales growth of more than 30%, EPS growth almost twice as that. They are cash rich, and they reinvest up to a quarter of their revenues in R&D, in CapEx. So really quite solid, but it's just had got a little bit frothy. You look at the S&P 500, it's on just under 22 times next year's earnings. There is some risk around these consensus earnings. And so it seems to us that the complacency which set in during the summer has not completely flushed out.